Thank you so much for joining our breakout session today. We really wanted this session to be interactive. We find that that's the most powerful because we can lecture to you or we can talk with you. And so Chris and I wanted to share a little bit of our experience that we've had with business owners and our clients and really thinking about the exit strategy, but what then, right? What can you do to not only maximize the value of the business, but also protect what you get post the event. A little bit of my background, I'm Inge Plautz, as I was introduced. I lead the state of Wisconsin for business development and everything that Old National Bank does, which gives me quite a nice suite of services to wrap clients around, but also understand what the root and fundamental needs are of clients and businesses, but then also leverage our internal resources, like Chris, as well as our external resources where there might be needs beyond our purview or our capability. That's the real fun stuff. That's what I love to do, and that's how we truly bring value to our clients, and we have opportunities to introduce clients to each other. So, Chris, I'll have you introduce yourself.
My name's Chris Brumfield, been in the wealth management space for over 25 years. And what that means is I've run into various situations and circumstances throughout my tenure to be able to really help clients because no situations are ever the same. And so with Inge and I working closely together, we're able to really take a comprehensive approach to all of our clients and our prospects to be able to give important information and really be able to deliver solutions that really address our clients holistically. And that's the bottom line, is to really have a holistic approach.
Well, I think it's always interesting to share case studies versus just technical aspects. And one case study I always refer to is a couple of summers ago, I was golfing with a business owner, and we were having a conversation about timeline, exit strategy. Their son had just moved to Arizona. They were to go to college. They bought a condo, and they were going to spend a lot of time going back and forth. And this business owner, it's owned by the family, single-family business, and they said, you know, I think we're going to exit in 6 years. And I said, wow, what's the magic number 6? And of course it was either an age or when there was a graduation or a retirement age. And I just asked a couple of questions and I said, well, what if it's 12 years? And they kind of looked at me. I said, what if it's 3? How are you going to plan for that? How are you going to own that? How are you truly going to direct the timeline that is appropriate for you? And do you know what you're worth today and how to maximize in 6 years or 3 years or 12 years? And so, not to put a deer in there, a deer in the headlights, but it really kind of resonated to a deeper conversation of what does exit look like and understanding being in control of when that happens. And understanding, having the opportunity to be in a power position of truly understanding what is my value. If somebody walked to you today and said, you know, we want to do a transaction, we want to acquire you, what's your number? How can you truly understand how to build that value and also defend that number? So there's a couple of ways that we sit down and talk to business owners about what is it that you are trying to execute on? What is that desired outcome? And sometimes it's not just a number, sometimes it's ease of access, right? Smooth transition. Maybe it is a succession planning. And so there's a couple of things to truly know and understand about a business to maximize value. There's a lot of things you can do to dilute your value as well. And many of those aspects are, when you think about your business, the fundamentals. What is the barrier to entry of your business? Is it defendable? Do you bring a certain level of value? Do you have a proprietary service or product? That all will add value. But then thinking about your leadership concentration. If you leave, I mean, most people who want to exit, well, most owners who want to exit don't want to stay with the business in perpetuity, right? That's the whole point. Well, if you have a leadership concentration, there's usually a relationship concentration, a tribal knowledge concentration, and thinking about surrounding yourself with that leadership level not just one level down, but across the organization, that is a powerful thing to be able to say to a buyer, I can step back and give the keys over to the business and know that it's going to run smoothly. Understanding that the new owners would probably want to influence the leadership and maybe a new CEO or whatnot. But it's really critical to know who owns the relationships and who can run the business when you're away or when you're not watching. A couple of other things too to understand is, and I've heard the term say that owners have never known their business as well as the day that they sell. And the reason that people say that is because taking the time to go through a due diligence process and understanding what your infrastructure is, truly what your margins are. You know, I always love to ask a client, you know, or a business owner, do you know which client you really should be firing? That client that's causing you a lot of work and a lot of margin. And just because they might be a great name to have, are they really adding to the value of your business? And so being able to go through those processes of understanding how clean are the books, have they been audited, have they been reviewed, and really just having a process across the organization of transparency. Because that's when you're going to be able to sit in front of a buyer and say, yeah, we've vetted these numbers and here is why we believe we deserve a premium. Or it'll become very evident if you have a customer concentration or an industry concentration that might be susceptible to regulation that might impact your business. You can then start to diversify away from that so that when the time comes, you don't have that big risk on the book that is going to dilute your value. So I always like to, when reasonable, recommend that business owners go through like a trial due diligence. You know, reach out to a vetted individual or company that can do a valuation, and not the type of valuation that you're doing for estate planning to, you know, minimize the taxes or for ownership planning, but really looking critically at the business for the right purpose. And going through almost a mock sell or mock due diligence is a very sobering but a very eye-opening exercise to go through, because it puts the owner, it puts the leaders of the business and the board in a position where they now have power and they can defend what they know the value is. I'm going to pause there. Any quick questions? A lot of these things are probably things that you already know, but taking the time to truly make a project out of this and carving out that space to position you for an exit is time well invested.
I was just curious if any of the owners that you talked to had a reason why they didn't maybe practice going through what the valuation is and the margins and that type of thing.
No, I'm sorry, the question is any owners that have gone through that?
Well, I'm sorry, I'll stand up so you can hear me a little bit. I think a lot of small business owners don't really think about that, and I was curious in your exploration of that, if they had a reason they didn't take a look at some of their customers and didn't maybe walk through the process or have that conversation till the last minute, they're ready to sell and they go, we're not ready.
It is such a great question, and the answer is, for the most part, it takes time, right? It's a distraction from the business that you're trying to build. Chris and I have had conversations with business owners that, you know, now they're finally thinking of how to protect that thing which I have built so much, you know, to build my legacy and for my family. But it honestly is, there's so many other priorities and conflicting, you know, time pressure and items that you have to do, that this is the one that gets put on the back burner and often is not something that it should be baked into any strategic plan. It really should.
Yes.
To understand what your, not only what the value of the business is if I want to exit, but to understand how to run the business appropriately, how to maximize the value, and how to position for potential acquisitions, right? And understanding where does the value come from? Who are great suppliers? Who aren't great suppliers? Who are great clients? Who are the ones that you should have fired 10 years ago? But to answer your question, it takes time, and I think it's a distraction because many business owners have a number in their mind and they don't want to be proven wrong.
Well, and through that process too, what about the unknown weakness that comes up that you were completely unaware of? You thought, everything's fine. But then you go through the process and it's brought to your attention. And now you have an opportunity to turn that around before you actually take it out for others to take a look in.
Yeah, no, it's a good point. The other aspect that I will definitely mention is throughout this process, it is very important to bring on it doesn't have to be a fiduciary board, but it could be an advisory board to help you think through this process, not only to build your business, but also to think through how to go through a due diligence process, because if you choose the right advisors and the right directors, they're going to be additive to your process that you don't have to necessarily go out and hire advisors. We always like to say you bring on directors on your board that you can't necessarily hire, those who've been through the experience, who have seen what not to do, and who can help guide or at least map this process out. Now, this is probably not a plan that you want to execute if you want to exit in the next 6 months, but it is good to have a sense of where is the business currently and what is its market value and what are you willing to do and what do you need to be able to walk away. Now, that is a good segue into now that if you as a business owner have gone through the process, maybe had a valuation, maybe went through a trial, due diligence, just sort of went really on the surface of what a process would look like. To be able to say, okay, I know that I can defend a, 5 times multiple on the EBITDA that's been normalized over so many years because we're capital intensive and we have this one exposure to an industry that's a bit volatile. I can comfortably say that my exit is this. How do you then protect that exit for your legacy, for your family, to do that which you have aspired to do post the exit?
Mm-hmm. Well, and that's where it's one of those circumstances where, as a business owner, you are really busy with the concept of, oh my goodness, I have all these things I have to do and learn, because it's selling your business isn't exactly top of mind. It's the back burner, as we're talking about. And, I have always heard an adage in my career about business owners that they are so lucky because they get to work half days. It's any 12 hours of the day that they want to work. So when you have somebody who is looking to sell a business and then take on this due diligence of potentially selling it, you have your day-to-day job to keep the investment going, if you will. The factor then becomes, I'm going to say as a wealth advisor, I know you don't have time, but I do need a little bit of your time. People usually are quick to say, and I would agree to a degree, to an extent, that, I'm waiting to, after post-sale, to sit down with my wealth advisor and do all the details, all the things. And I do think that there's some appropriate items that could be, and do need to be held off. But prior to your sale, and early in the process, what's really important is to think about that ultimate payout and how you can protect yourself from a tax planning strategy. And that happens early because there's some information and detail to go through, but then we have to set the necessary vehicles up in place in order to allow that to occur on the day that you do inevitably and finally sell. And so as you think about that, what we want to talk about is, for instance, are you philanthropically inclined? If you are, that's our opportunity to talk about what that might look like. How much would that be? And that might just be an earmark conversation, just for the time being, just to say this is what I think it is. The next question is, but you're asking me now about my philanthropy. I have no idea where I want to put it. I would really rather prefer that in my time after my business, I want to spend time in that space to do philanthropic different tasks. Well, that's the beauty, is that there are instruments out there that allow us to park those funds, and they can sit there for a while without you even designating where they need to go right away. So that allows you to have that. And when you do that and you put it in there, you are able to lessen your amount due to the tax man. And that's always a wonderful outcome as well, too. And this is really, it's really creating that legacy that you're looking to leave behind. And so what's really important is when you do meet with a wealth advisor on this front, before you do meet with anybody, it's really imperative to know what they are able to provide and what they're not able to provide. At 1834, which is a division of Old National Bank, in our wealth group, what we do is, I like to call it, really informally, I like to call it our financial SWAT team. We have our SWAT team descend upon you, and what we do is we have expertise in the area of wealth planning, trust, private banking, and investment management. And that wealth planner on our team, they're going to really get down into the details to understand where it is you want to go, what is the legacy you want to create, what is it we need to get done now, what's imperative at this moment, and then what's important down the road. And so it's always important to know, because there's advisors that can accomplish many different things, always good things, but for specifically what you're looking for, you'll want to make sure you have a team that is really laser focused on it and has the experience in the space.
That's very helpful, thank you. Do you have any questions around kind of looking out on the horizon and thinking about, and it is important understanding, lifestyle. What is the need? What is that lifestyle going to look like post-exit? And then to be able to say, well, philanthropy is an important part of that, and it doesn't have to be beholden to the one individual, right? It could be something that the family engages in, but it truly is a tax strategy. It's taking money off the table that is not susceptible to tax, and so that you can keep more of what you earn, right? What you work so hard to earn. Another thing that I always like to mention is, in privately held businesses, we find what's called embedded family offices pretty frequently. And this is another aspect that could be a risk of any seller, any owner that is looking to sell. It could manifest itself in ways of the CFO is maybe spending some time doing family tax planning or family taxes at the end of the year, or a trip might be booked through the same mechanisms as the company or the corporate expenses, but it's more family trip. Any kind of services that are commingled or that are maybe dedicated, that should be dedicated to a company, that are then used for personal or family use in a privately held business, we would consider that part of an embedded family office. The reason that this, if it's not managed appropriately, for example, if we don't know that the CFO is spending 5% of their time doing work for the family, if it's not clearly defined, it could pierce the corporate veil, and for bankers that's a bit of a problem, but it could lend itself to some exposure and risk for the family. These elements are going to manifest and prop themselves up when you go through a due diligence process, because you are forced to really sit down and go through all the details of what are the resources, where are they being deployed, and for what appropriate outcomes. And so there are easy ways to kind of peel out a family office or a family structure, which what we've seen a lot as well is on exits, families have taken a substantial amount of the exit wealth and created a family office to be able to then manage those assets or those those funds post-exit. And so that is, I'm sure you're familiar with just a lot more services and opportunities around serving family offices in this day and age.
So just curious, in the audience here, who are the business owners? Okay. Is this something that you're thinking about in the future, like way down the road, just trying to get information at this point? Because there's a lot of connections here. I don't want to expose anything, but is this something that, as business owners, this is kind of getting intriguing as far as what perhaps the next step may be?
We've been thinking about it, and then all of a sudden we saw this even just pop up, and we just dive in, let's go, and we're just gathering more information, but we are seriously in a process. So we're just trying to do some due diligence here to get the right questions and that to ask.
I'm more like what you're saying, I got a date in 5 years, but look at it now though. We're looking at 10 years, maybe you can get the same money now than what you do in 5 years.
Right.
So look at what's worth.
Well, I think it's, and thank you for sharing, because it's good to know now what you may or may not pull the trigger on, but having the opportunity to make a decision with confidence, right? The other conversations we frequently have with business owners, friends, whoever will listen to me talk, is understanding what your options are, right? Because usually it's strategic or private equity, and there's a lot of gray in between. There are opportunities that I've seen clients maybe carve out portions of their business, whether it is to seed a family member or split out if there are family members or an owner that really wants to run with a certain division of a company, kind of splitting it out and letting them run separately, but still be symbiotic. There are obviously ESOPs is a popular way of going about it as well. So and it doesn't have to be 100% one or the other. There are lots of phases that companies can go through while building value and enhancing the potential price at the end, but still looking at all sorts of different options of exiting. Even in the private equity space, there are independent or fundless equity firms that function a little bit differently to what we all maybe think are private equity or types of private equity experiences. And so just knowing, being able to sit down and kind of going through the gamut of what this could look like. But I think fundamentally when Chris and I was talking to business owners, it's truly understanding what is your desired outcome. Because there is a way to craft your desired outcome and to get there. And it might take a different path than what you were thinking, but there is a way to be able to say, if it's 5 years, and this is what it looks and feels like, and here's what I want my legacy to be, there is a way to take ownership and create that versus, oh, I think multiples are good right now, maybe I should go to market, and then being thrown to a lot of other work that you may not be apprised of what you're about to experience.
So as an observer of Inge, while she's talking about business buys and sells and so forth, she really does take the time to do whiteboarding sessions to really make sure that you're getting a lot of information. It's overload. It's like, oh my goodness, all this is coming at you at once. But what's really nice is to be able to have a little bit of peace and say, okay, what is it I really want to see at the end of it? Because the other part of that, one of the panelists said today was, what does it feel like when you are retired, when that unceremonious end happens? And the wires go out, and then it's like, that's it. Maybe the dinner's already passed, we don't know. But it's that whole situation where it's all done, and that's a shock too. That's a shock for many people, business owners and not, that go into this next phase, and there's really not a clear-cut plan as far as what that's gonna look like. This is also an opportunity by which to do that, and if you're looking to sell a business, it's really important to just take a moment, not that you're going to answer all the questions, but you are going to come to a conclusion as to what that really needs to look like and what it needs to feel like, and also the family discussions, what they're going to, what their participation and involvement will be as well.
So that's a good point. The other thing I'll mention as well is the whiteboarding sessions, I think, are so powerful because it really gets all the options out on the table. A little bit of a different scenario. We were just talking with a business owner yesterday who's looking for investors, and they've grown a really successful business, still don't really need investors, but are looking to continue to grow and looking for the right investors. And just talking through the types of investors that you could consider, whether it's a silent investor or an ownership or but it starts with the desired outcome of what do you want to create, and then eventually what is their role look like, right? They want to grow, they need an infusion of equity, they need some more talent, but in 5 years they want to retire because the kids are having grandchildren, and so it all is anchored in the desired outcome of what you want to look and feel like, and then creating the opportunities to create that reality. But I think we're all business people that have seen, especially in the financial and the wealth and the M&A space, we've seen all types of deal structures. I've spent a fair amount of time in private equity and bond financing and global trade and dealer flow plan. I think I've seen every way that capital can be extended and created. And so it's really powerful to sit down with somebody and say, what could this look like? Or what does that mean? And go through a process of elimination and say, yeah, that's not something that is viable for us, but at least we know now, right? And so I would also say, challenge your bankers, challenge your advisors to bring some ideas and some creative value to you, because it's not just a term loan and a revolver that's available out there. There's other options as well. But the whiteboarding sessions are important because you get everything out on the table and you can kind of tweak and play around with it as well.
And it clarifies the message, because there's things that come out of those sessions that I think people are just not expecting to see. And it was like, no, that's something that I had in my mind that I wanted to happen, and until it's articulated, it's just not there. It's not the open communication that you're looking for. So.
Can you talk a little bit about timeline of any tax changes for business owners, or any changes in the tax strategies or estate planning strategies that are coming down the pipeline that owners should be aware of?
Well, we all know that the sunset is occurring next year on some of the gift and estate taxes. And so that does add another layer into everybody who's looking to sell a business to get in a large wire, if you will. And so it's really important not to wait, especially on that front, because we don't know what Congress will or will not do. And so we have to make sure that our clients are really focused, all of us are really focused on making sure that the estate and wealth plan is up to speed now based on your wishes, and be ready that if there is any kind of a lifestyle shift, such as a salary business, that we're able to incorporate that and address it before the end of that sunset. So that's the big one that's on the horizon, and I'm sure everybody's starting to see it. It's you'll see a lot of financial advisors, including yourself, putting things out there with respects to that sunset and some of the other items that could be also included in that sunset. It's out there on LinkedIn and the news and so forth. And so what's really important is to talk to your advisor right now, because as we're talking today, it's all in generalities. This is not advice. Advice happens when we speak one-on-one and when we really know your situation and then prescribe or recommend very precise actions. And so if there's any concerns on the tax front, you should be talking with your advisor right away.
I was curious if you've come across a lot of non-compete issues when people are selling their business.
From the perspective of
The buyer, making sure that the person selling the business doesn't come back and compete with them.
Open up a new shop, if you will, and then go after the client base.
I think it's case-by-case basis, to be honest. I think if it's something like, a high, cost of barrier of entry, that's a different story. But I haven't seen that many, but I definitely have seen some, because many people don't just want to go sit on their porch and, in their rocking chair and yell at the dog, walking by. There is a desire for continued industry, right? And the one that I love to always hear is, I want to go serve on boards. So there's a lot of people that want to serve on boards, that want to come help their companies exit. But the non-compete is usually where I see if it's somebody that's critical to the business, that's created something of unique proprietary elements. But I mean, the non-compete probably is not enforceable for all that long. So I haven't seen, that's not an area that I can really opine on, but I haven't seen that many. Is that something that you're seeing more and more of, or concerned about, or?
No, I came across that a long time ago and was curious. The company was bought out by a big company, and the owner still went and started a competitive company and got away with it. I couldn't believe it.
Yeah.
Oh, really? Did he really bite into the share that was sold to the larger company?
Enough. because he was very good at what he did. And I couldn't believe the company allowed him to do that.
Yeah. So, might not have had it in the language. Maybe. Interesting. It's a great
Well,
question.
they were so big they didn't really.
Did they recognize it?
Yeah, that could be it.
Other thoughts?
Well, one point you brought up about philanthropic, what I'm seeing happening, and it's really, I have a foundation for the veterans, and what people don't realize, in the past, a lot of people would put their philanthropic ideas after they pass away. But I think what they're realizing now, it's much better to do it while you're alive, because you can control it, and you might change your mind, you know. And so I think that's a big issue that people should look at, and, you know, do it while you're alive. And plus you get all the benefits of great feelings. And,
Yeah.
Yep. And that is, in fact, spoke with somebody today where we talked about, yes, it's important, but it's really important to do it while you're alive, to really enjoy it and to take that in. And that's great to add. I'm glad to hear about your foundation for the veterans. Other thoughts? Not all at once.
Yeah, right. The one thing that, you know, we get asked frequently is, you know, did I miss the trend? Did I miss the wave of, you know, multiples to sell my business? And you know, it's kind of like trying to invest in the stock market. You're never going to beat the stock market. You're never going to buy just right or sell just right, but mitigating and managing risks and being able to recognize what's within your control to be able to eliminate those unknowns is really what this process is about. Yeah, truly understanding your business and building that value. But as we heard today, really good businesses that are run well, that are transparent, that are understood, will always demand a premium. And having the right leadership in place, and whether you're an owner that wants to maybe sunset after 6 months, or you kind of still want to play a little bit, but have those half days where you know, you maybe work 2 days a week and play golf the rest of the time, though that is possible, but it is also understanding what your value is, what your purpose is post deal. So from a banking perspective, yes, the interest rates have gone crazy and all the structures are a little bit different than a year ago, but we're still seeing deal flow. We're still seeing a lot of opportunity and activity in the market for businesses that are run well, that are that know their businesses well, that have good leadership structure, that have good, you know, ERP systems, not something on the back of the napkin. But there's also a lot of wealth and a lot of money in businesses that want to go places. And so we're seeing a lot of movement from clients who want to diversify their offerings in buying existing businesses, successful businesses, and then having maybe the owner help integrate and then sunset. So the deal flow is still there. It's a little structured a little bit differently than what we've seen, but I'm working on a lot more acquisitions from corporations going on to do more strategic acquisitions than on the private equity side, but that's just kind of what I'm seeing at this point.
Can you explain what you said about estate taxes and gift taxes sunsetting? You know, estate taxes right now are like 16 million for 2 people, that might go back down to 2 or something.
They're going to revert back. They're obviously going to adjust up for inflation, but they are going to revert back to what they were prior to the legislation that increased them. And so that's not until the end of 2025. You have all the way through the end of 2025. And as it currently stands in the law right now, it will revert down.
So you're saying then you take your money and put it in a trust or something, or some way so you don't have to, your future kids or whatever don't have to pay that tax? Is that what you do?
Well, there are a lot of different approaches. And again, it's going to be one of those circumstances where you have to take a look at the various trusts that are available and what your intentions are with the lion's share of funds when you get to that point, obviously. I mean, because for instance, we have the IRAs. If hypothetically, I'm just taking one little tiny slice of it, if parents are deceased, and then that IRA goes to the next generation. They've got 10 years, and so where your intention was to pass that down and let that be their retirement, it no longer is, because they're going to have to pay taxes somewhere in that 10 years to completely deplete that. So there's a lot of moving parts right now, so that's always the case, right? And so that's why you really need to sit down with a wealth professional. And our wealth planner, for instance, the lead, she is an attorney. She used to draft, but she doesn't anymore. She works from the perspective with her law degree to talk through all these various trusts, and then together we implement them. But there are ways through trusts that you can make sure that you protect some of those assets, but it'll be a different game going from where it is right now down to what it was previously. And plus you need time to do it too. That's the other element. Not only do you need an instrument, but you need time to put it in place, because the government wants to see it in that position for a while as well. So that's where, again, broad brush response, you get down into the technicality when you sit down with your advisor, because it's really important to understand all the different legal ins and outs of it.
Got it. Okay.
So that was as clear as mud, I'm sure, but yes, there's an opportunity.
So if you started today and you wanted to like sell your business, it might take 6 months or a year to sell your business. You're starting now with your planning of what you're going to do with that money, because it might take 6 months to a year to set up the trust and work.
Correct. Correct. You have a wide variety going on in this orchestra. And again, you know, the advisor's going to be very understanding. You're going to be pulled in many directions. Yes, these things have to be figured out now in order for it to be seamless down the road.
Did we just move your 5-year timeline to 2?
Done now.
Well, no, I'm not tongue in cheek, but that's why when I always tell clients and owners, demand that you have an advisor that pulls together all the fragmented pieces that are out there, whether it's retirements, you know, you've got your investments over here, your 401k over here. It is not really your role to be sharing what your state attorney said to your investment guy and then bring back, you know, the broken telephone. You really need somebody who can be your advocate in the center of all of this to be able to orchestrate that, because it is not your task or your expertise to be pulling this stuff together and selling businesses on a daily basis. And so it is a lot to manage, and you sort of need an accountability partner to get to that end point, because time passes pretty quickly when there's a lot on your plate.
And with the country $32 trillion in debt, you know the government's going to come back after everything they can.
Right. And it's just important to have those conversations to see all of the strategies you potentially could have employed for that point, because you do want to make sure that you're as tax efficient as possible. And one of the things that we do is we work really closely with our clients' CPA, so that together, where we come up with different things that thread together from, you know, business sale and other things that are occurring that we see, we consult very closely with the tax preparer as well to make sure that it's carried out and that everybody's in alignment. Because if that team, I call it your personal board of directors. If your personal board of directors isn't working together as a bigger team, despite, you know, you have an accountant here, you have an attorney here, we're not all working together, we are not benefiting the client. And so that is what is absolutely paramount, because there are many loose pieces that are out there. So I want to thank you for setting me up for that.
Well, it is 5 o'clock, and I believe that's when the bar was going to open. We really appreciate you spending your time with us today. We'll be around for a little bit if you had any questions that you didn't want to ask in the open, but thank you so much. Really appreciate you joining us today.
Yes, thank you.